Welcome back to Investing Talk Podcast.
Today we're looking at energy fuels.
As usual, before we start, subscribe, like, and comment to this video to support the show. And if there's a specific company you want us to look into, leave it in the comments below.
So let's get into the analysis. When we look at energy fuels, we're really examining a fundamental transition story.
Right. It's not just about uranium anymore.
Not at all. They're moving from that traditional focus to a major integrated critical minerals platform.
And that diversification is really the key, isn't it? So what are the core pillars of that shift right now?
It's basically three main revenue streams. You've got uranium, of course. Then you have rare earth elements, and finally, heavy mineral sands.
Okay.
The whole strategy is to reduce their exposure to just a single commodity. I mean, they are the leading U.S. uranium producer, but the biggest growth potential, that's coming from their rare earth and heavy mineral sands projects.
Let's talk about that U.S. dominance for a second. Why is their White Mesa Mill so important in all of this?
It is absolutely their core competitive moat. I can't stress that enough.
The only one.
The White Mesa Mill is the only conventional uranium mill operating in the U.S. Think about the regulatory and operational barriers that creates. It's a massive wall for any competitors.
And they're leveraging that same asset for more than just uranium.
Exactly. That's the brilliant part. They're using it for their REE separation capacity. And on top of that, they are also the only U.S.-based licensed producer of high-assay, low-enriched uranium, or HALEU.
HALEU.
That sounds crucial, especially for government contracts and, future growth.
It is. It really is. In Q1 2025, their HLE revenue nearly tripled year over year.
Wow.
And they secured a $12 million Department of Energy grant just to boost their HLEU throughput by 60%.
Yeah.
That shows some serious federal backing.
So the government sees them as a key piece of the domestic supply chain.
Without a doubt.
Okay, so on the rare earth side of things, what actual progress have they made? Because it's one thing to have a plan, but another to actually execute it. And execution is where they've really hit some major milestones. They successfully completed pilot production of high-purity dysprosium oxide at White Mesa.
Dysprosium, that's one of the heavy rare earths, right? Crucial for high-performance magnets.
That's the one. This validates their technical capability and puts them years, I mean literally years, ahead of many of their North American peers.
So they're not just, digging dirt out of the ground. They are creating high-value, refined products.
Yeah.
How is this all reflected financially?
It's a bit of a mixed bag right now, which, is pretty typical for a company in a major build-out phase like this. They had really strong Q3 2025 uranium sales, which led to a 337% year-over-year revenue increase in that segment.
That's huge.
And they also managed to achieve a net income of $1.9 million in Q1 2025. That was their first positive net income in 3 years.
That's significant.
Yeah.
But I know they've been raising capital heavily recently, which, that often signals high expenses or maybe even some trouble.
You'd think so, but on the contrary, that financing was a huge institutional vote of confidence. They raised $700 million in convertible senior notes in October 2025.
And it was oversubscribed.
Heavily. It forced the initial purchasers to exercise their full option, which is a very, very bullish signal.
And the terms on that debt?
Extremely low. The debt itself has a 0.75% coupon rate. Plus, they used capped call transactions to protect against excessive dilution. It shows really disciplined capital management.
Okay, so where is all that $700 million going?
Directly into that growth thesis we've been talking about. It's funding the Phase 2 rare earth separation expansion at White Mesa and accelerating development of the Donald Heavy Mineral Sands project in Australia.
And there's another one, right?
Yes, and the Toliara project in Madagascar. The long-term goal here is to generate up to $986 million in annual revenue from critical minerals once they're at full ramp.
Okay, but we have to talk about the risks here.
Of course. The company remains loss-making in the nearer term. Analysts are actually expecting a full year 2025 revenue decline before a big rebound in 2026.
Which makes sense. They're prioritizing capital expenditure over profitability right now.
Exactly.
And what about that valuation? I hear it trades at a pretty high price-to-sales multiple.
That's right. The price-to-sales ratio is quite high, which It signals that the market is already pricing in a lot of that ambitious future growth we just discussed.
So if there are any delays,
If management delays the ramp-up of the RED or HMS projects, that high valuation could come under some serious pressure. This is the core execution, risk-juggling uranium production, the Phase 2 REE expansion, and 3 new HMS projects all at once, globally.
so execution risk and commodity price volatility, those are the main headwinds. What are the key checkpoints for investors over the next, say, 3 months?
The near-term calendar is pretty packed. First, you have the Q4 and full year 2025 earnings release that's expected in January or February 2026.
Which will be critical for assessing their production guidance.
Yep. Then there's the ETF quarterly rebalancing in December, which often drives liquidity and some short-term volatility. And finally, we'll get the institutional buying disclosures in January, showing which big funds are accumulating positions.
Okay, shifting to the technical picture. The stock has shown some great momentum, delivering a really strong multi-year return.
It has. The technical signals point to a pretty constructive setup. The current price is trading comfortably above its 200-day moving average, which is a classic long-term buy signal.
And what about options traders? What's the sentiment there?
We've also seen some bullish options flow. It looks like sophisticated traders are positioning for continued upside, often targeting a price range somewhere between $10 and $20.
And finally, what about the speculative buzz, the chatter?
The market chatter is really focused on two areas. First is the potential for new large supply contracts with the government or maybe utility entities for uranium, especially given all the geopolitical pressure on supply chains. And second is the possibility of them securing a joint venture partner for that rare earth element refining expansion.
Both of which could be massive catalysts if they happen.
Huge catalysts.
It really sounds like Energy Fuels is positioned right at the intersection of the nuclear energy cycle and critical mineral supply chain security. It's like a dual tailwind that could make the stock a very interesting play over the next few years.
Absolutely. While the company faces, the inherent risks of a capital-intensive build-out and that premium valuation, the unique integration of its assets.
Yeah.
From uranium and HALEU to high-purity rare earth elements, it just makes it a truly strategic asset in North America.
That's a great summary. Remember to subscribe to Investing Talk podcast for more deep analysis into the market's most compelling stories. We'll catch you next time.